Hi, this is Zak Mir with the Bulletin Board Heroes here at Zaks Traders Cafe for Tuesday, the 1st of October. Starting off with the FTSE 100, which is bouncing off the floor of that rising trend channel. The one-year channel there, 82.30, I suppose, the low area there, and looking for 82.40 really is the floor, but we dipped slightly below that. Top of the range there, 83.60, so we need an end-of-day close above that to give us the big move up to 86.60 in the top of that channel, which seems highly unlikely given the lay of the land, but you never know. On the downside, an end-of-day close below the 82.30 area, and we've got the risk of not only 81.65 and September support, but also the floor of that falling red made trend channel. RSI remaining within the two bands there, 47 to 56, so still no hint there of which way this is going to go. It's a bit of a cliffhanger and a nail biter rolled into one. Moving on to the DAX, and here you can see that we're holding up well above the above the latest gap, and also above the old record highs near 19,000. Above that, we're looking for 20,100 by the end of this month, and so far looks relatively calm there. Early and end of day close back below 19,000 and the floor of that gap, really signaling that we might have to head to the floor of the channel on the 50-day line at 18,400. Moving on to the Dow, and here the expectation was, or is, that we'll have a rally going into the US election just to boost the incumbent party's prospects. But here we've got 43,200 as the top of the channel there. We had a nice hammer candle yesterday, bouncing above the recent support, 41,900. And the longer we stay above that area, the greater the chance of a move to the top of the channel, and possibly much more. Worst case on the downside is a test of the 50-day line, 40,800. But the moment that seems gratifyingly distant from where we are at the moment. Moving on to Bitcoin, which just so far hasn't wanted to break that February resistance line. That's now at 67,700, but at least we're holding above the latest gap, or at least the latest support, 62,300, and the longer we stay above that, the greater the chance of a move higher. We've got the RSI at 56, which is in a good place for a move to the upside. Worst case, if we have a rug pull down to 60,000 and the 50-day moving average. Moving on to gold, which has been the star of the show for most of the summer, and seems to be wanting to test for support now. 26.20, the old high there, early September, and the floor of the channel there now at 26.30. So hoping that any dip that we get, as we're having at the moment, will not be below that. If we do get a dip, then the next level down is around 25.60, which was the August resistance and mid-September support. Moving on to the stocks, and starting with Avacta, which has continued to frustrate. Here we had the double top or double bull trap through the 200-day line, the Deutsche Bank key reversal down, so thank you to them. And now looking and hoping for this market to basically bounce above the old June support there at 42 pence. Basically, what we don't want to see is a return to have to test the 40 pence area, which was the June support. The first sign of any recovery here would now be an end-of-day close above the old support, or old resistance rather, of yesterday and the day before, so above 52 pence. But the shares currently making hard work of the situation, even though the RSI at 27 is rather oversold. Onto a stock which is doing rather better at the moment, and that is rather more obscure as well, Argent BioPharma. Here we've gapped up higher after the Bear Trap Island reversal, so this is looking like a very strong situation. 25 pence, the minimum expected here at the top of that triangle there from the early part of this year, and after that I suppose we're looking at 40p. By the end of next month, which is the floor of the, well, at least the last resistance back in November. So rather exciting there, especially while we remain above 16-17 pence and the low of the day so far. Well received update for a change from Cobra, and here's the second gap in the last couple of months. So gap higher we had in August, that was I suppose filled, but this time hopefully we'll not need to fill the gap, and 1.07. We've also got the prospect of the 200-day line starting to curl up as well, and that points us to 1.4 and 1.5 pence as soon as the end of this month, at the top of that broadening triangle from this time last year. So finally Cobra looking rather better. Also looking rather better is Capital Metals, which has had extended support in the 1.5 pence area, basically the floor of that gap there from October last year. That's around 1.4, 1.45. Above that, we've been looking for a return to the February March support area around 2.5 pence, and now we're looking for that as soon as the end of this month, while there's no end of day close back below 1.5 pence. Global is next, a stock which has covered itself in glory around here, but so far the second target there, 0.21, seems to have blocked progress. We'd like to see the shares remain above the old 1.16 resistance there from August and May, above that. Still looking for a break of 0.21 to take us to a best case scenario target as high as 0.28, maybe by the end of this month, but we need to get back on the right side of 0.21 pretty quickly. On to Kromek, which seems to be in the best environment possible, given that we're in the possible run-up to World War III and nuclear attacks. Here, the top of the rising trend channel there from April 2023, as high as 11 pence, looking for that maybe by the end of next month. We've got the 50 and 200-day lines both rising at the moment, which suggests we're in the run-up to a golden cross, and that tends to be the strongest part of the cycle, a point backed up by the unfilled gap to the upside and the bear trap rebound that we had last month. So that is cooking well at the moment. A stock which is just in the most beautiful uptrend you can imagine. KP2, core potash, rising trend channel there from back in May, and the top of the channel there, 4.1 pence. We're looking for that by the end of this month, especially while we remain on the right side of 2.5 pence. Onto mobile streams, which seems to be rising even more quickly than I can chart it, which is very gratifying. I think this was the first place that the idea of a move to the upside was mooted around 0.05, something like that. So it feels like an eon ago. But current situation is that we're above the old support there from back in the summer of 2022 at 0.24. And above that, we said that the shares could go up to as high as 0.33, which was the next level of resistance on the chart back in 2022 as well. So above 0.24, looking for 0.33 on mobile streams, and what a turnaround that has been. Shares up 358% so far this year, which is very impressive indeed. Moving on to Premier African, which is not quite as impressive, but first sign of a little bit of a sign that we had a bit of an overshoot yesterday, which didn't have to be Warren Buffett to realize, but the market bounced off oversold, and there is a chance of at least heading back towards that 50-day line, currently at 0.055, even if the shares then back off again. Moving on to another stock which is relatively obscure, Sabien Technologies. Here we've had a vertical move in the Mosman type of style, looking for up to 21 pence by the end of next month, after the break of the 200-day moving average, which is now rising there at 10 pence, above 10, looking for 21, 22 even by the end of next month. Massive cash windfall for Tavistock. Shares starting to get their act together now. I think the windfall up to 37 million, the market cap currently 18 million, so there is a disconnect there. Looking for the shares to hit a line of resistance up to 5.5 pence, perhaps by the end of this month, if they can stay above the 50-day line at 2 3/4, which I think, given today's news, they should be able to do. In fact, it's a bear trap gap turnaround there on that situation. Finishing off with Vast, where there has been a nice rebound actually after the Nomad-inspired overshoot to the downside. We did actually temporarily hit the top of that triangle we were looking for, around 0.13, before the shares have come back, and we closed the gap there at 0.1 pence. Above that and above the 50-day line, still looking for the best case scenario here of heading up to 0.16, fundraisers, etc., permitting. That's it from me today. More updates tomorrow.